Good morning. Happy Sunday. I hope you've had a wonderful weekend. Welcome to the Market Watch Group Weekly Market Prep. My name is Scott. I will be your host, of course. Yes, again, for those who only listening to the recording regarding schedule for tomorrow, celebrating Martin Luther King Day, no market session because there is no market day. That will be pushed to Tuesday. I haven't made the adjustment on the schedule, but that will show up later this afternoon. Yes, we will meet Monday evening for the Q&A at the adjusted time. I think we'll go look. I moved it to 8 p.m. There's just a few people mentioning things are a little too late. So I'm trying to find where we can get West Coasters there and it's not too late for the East Coast. It's a struggle. Is that on Monday? I don't even pay attention. I'm not going to lie. Steven asked about the college national championship. I have not even paid one bit of attention, to be fair. Couldn't even tell you who's in it. So funny. Yeah. So the answer is probably I doubt it. So, yeah, if you're doing that, that makes sense. We're looking to start recording all of our sessions and just posting them. We're trying to figure out is that too much? Anyways. All right. Okay, let's get started. As always, keep in mind this is for education and illustrative purposes only. We're not brokers. We're not advisors. We don't give trade recommendations or investment advice. We're going to posture. I'm looking to make the transition. I haven't done my slides yet. We are still looking at this orientation towards, making sure we accommodate beginners and keep the conversation oriented that direction much more frequently and for much longer. And then we talk about some higher level trading concepts at some specific times. Here, however, I'm actually going to go pretty fast today because I want to see if I can get done now that we're a little behind, maybe not by 9:30 my time, but maybe 9:35. We'll see. So the usual. So we'll look at the watch list. We'll create an opportunity list. We'll talk about trading plan. We are going to start with section 1 again. Who's up for it? Yeah, let's get our first pass of 2025. We're almost 3 weeks into the market. This is a good time to, we've oriented. We're feeling good. Let's go polish that plan. Sandy said yes, it's a good time. All right, she's in, I'm in. Everybody else, you're in too. Let's get started. Okay, let's start here. And okay, so I'm coming in at a 4. I think right now, and I tried the pull thing. The pull thing didn't work right. I can't remember what happened. I know I tried to sneak it in right before I left on holiday. I don't remember what went wrong with that, but I'm still trying. I still would like us to have, but it needs to be a scalable solution, of course. So I don't know yet, but I would be curious right now. Where everybody stands coming into today. 4 is where I am. I thought we're going to stay, maybe increase, but let's get started and see. Okay. Now, first and foremost, let's see if my pen will work now that I don't know why it's not letting me draw. I'm going to start the pen over. Give me 1 second. I do need that today. Whoops, I need the pen. So let me force it to stop first. And let's reload it. After Friday, I am confused, John said. All right. That's why we're here. As we start talking about this, what I want you to notice is interestingly, last week we had a big bullish engulfing candle. Ooh. So this candle from last week is bigger there, and you can see maybe not completely the shadow, but definitely body to body engulfing. It also pushed it back into the blue line, right? We're like, oh, we dropped below the line. So some people might think, oh, okay, Scott, are you gonna add a quarter of a point back? But no is my answer. If you did, I'm not gonna say, hey, you shouldn't have. Like maybe you're like, hey, I'm gonna give it that for getting right back in. Okay, that's fair. Why am I not? Because we didn't get to the blue line here, right? We got close. We technically barely and didn't quite get there here. So while we had been moving on that trajectory generally, it actually had already started to slow down for me. Already started to slow down. So the fact that we got back in it, okay, that's great. That's going to help it maintain the current trend. But right now, I need to see, does this get up? Because imagine this, if it goes right now straight to the red line, that's a great move. That's very bullish. And that would make me think, yeah, everything's good. Now, at that point, if it pulled back to there and then went higher, then I'd be like, yes, let's move that score back up. So for me, the 1 1/4 is probably going to be there for a good number of weeks. And even then, it's going to take a good something to push it. So I am a... Dun, 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 dun. Where is my score? And I'm going to stay whatever it is. It's a 125. I'm a 125. Sandy's a 1. She says, no, it's not even a 125. Great. I as we're watching this thing try to figure out what it's doing, fair enough, right? I think it's fair to say it's maintained its strength, its favorability. Whenever it's had some sort of a consolidation or possibly correction, it's always managed to battle back. And so I would be, hard to see it less than a 1. It would be hard to see it more than a 1.5. I personally feel like if you're 1 1/4, maybe there's something that you like that's even more bullish. I mean, it is when you look at a step back, you're like, yeah, that's pretty good looking trend, but it has started to meander down a little bit. So that's where I am. Steven is a 1.5. There you go. Okay, so he's like, hey, I like the bulls. Fair enough. Let's keep going. Good discussion. I got to keep moving and keep myself from talking too much. Making sure. Okay, let's talk short term. This one could be interesting in the discussion. Let me bring that up. Okay. Let's look at the little bit of the history of what happened. Let's go all the way back to when we were prior to the current consolidative price action. December 15th, that was our highest score, 7.25. Everything was great. And then what? Then we had that big drop. What is the holiday tomorrow? Martin Luther King, MLK Day. Sometimes called Civil Rights Day, or just sort of like known as the civil, I don't know. It's Martin Luther King Day is what I know it as. Maybe I'm off. Someone help me here. I'd fail a civics test probably. It's terrible. It's the civil rights celebration called Martin Luther King Day, I think. Right? Yeah. Okay. So while I was gone, and I've kind of put it together, but big drop, and that's to account for this. Boom. 0.5 point. I think that makes sense. And it came up, came back. It was really, I mean, other than that day there, the next day it only got to the same place. The next day it started lower but recovered. So other than this, that's literally, here's what's interesting, right? When I was looking at it, this day here, that was it. Prior to that day, everything looked fantastic. The next couple of days, it was just like wiggling around that same area. And then until last week here, for this little patch, it didn't really get worse than that. And here we are now, right? So I think it's important to kind of like trace back and be like, how did we get those scores? Like, is it worse than we thought or better than we thought? I mean, when you look at it that way, right? This got minus 0.5 right there. Bam, took it away. And then what happened? Okay, so let me go back. And then nothing, and then nothing. And then we lost another 0.5 point around the 5th to the 12th. 5th to the 12th. So here, what did we have? I mean, technically, this was a lower high, but it really didn't hit much. So at this point, I think, is where we scored minus 0.25 for the lower high here. And then minus 0.25 here. Does that sound right? Okay, so then those two came in at the same time to go from there to there. 0.5 point. And that's where we are now. Right? There's that 0.5 point. So, did we get it back? Oh gosh, I'm sorry, Sandy. Sandy said, is it hard to find an entry? No. In fact, I was like leaning towards an entry on something on Friday, and then I was like a continuation entry though, right? Because everything's just a little bit extended. I think patience still is part of this, and here's why. Because if you look at what we have, are we scoring this right here? But it didn't get a higher high. It's the same high. So at this point, for me, I'm leaving my score the same. I feel like this 0.5 point and this 0.5 point is reflected. We had that 0.5 point there, and here we stand. I think that my score being a 0.75 reflects that we could recover from this pretty easily, right? Like, if we were to pull back from here and then turn, there's a 0.25 point. Now I'm a 1. And as we take this out, there's another 0.25 point. Now I'm a 1.25. And then, right, and all of a sudden, there's our trend back, and we have a nice 3-month run in February, March, and April, which is very cyclically and historically prevalent. Right? This little hiccup, we said this all the way back. We said that January, which started here, could be very much a sideways. Yeah. If all of a sudden we had this pull back and then do this, you're at the end of January. Whoops, sorry, it's a terrible line. You're at the end of January and nothing happened. And then we're ready to move into a nice bullish cycle. Let's see if that's what builds. However, as much as that's what I'm kind of thinking might be building, what do I see? No change for me. I'm a 0.75 still. The red channel is the new trend, less steep. But you're one step back. We're on short-term PJ. Remember that the red is a long-term channel, not a short-term channel. So it has no bearing almost at all. Like, do we see it? Yeah, of course we see it. But am I like, wait, it's... So this is not... None of these three lines are actually having any bearing on my scoring of the short term right now. Okay. So hopefully that makes sense why my short-term score is staying at a 0.75. That's what I'm curious about. Where's everybody scoring the short term? If you're willing to share. There you go. Oh yeah, Sandy. Nice. You can kind of see there that chart that Sandy posted. Go grab that. Here, I'll pull it over. I haven't pulled that up for a little while. Let me see if I can grab that real fast. Boom. In fact, cyclically, January pulls back. Then February helps bottom. And then what do we have? We have there to there. And you can kind of see that's actually exactly the thing we followed. We had a great October, November, December. Real strong. And from like it was a little earlier. It was more like in this area is where we sort of topped out, and we did have that drop. It's a little bit sooner, right? So it's not like the market just follows this exact path. This is a seasonality index. This is a composite of like 25 years. So this shows you the tendencies. So after the tendency of this, especially if we're in bullish economic conditions, we definitely should have an expectation of this. And then what? And then we tend to see some sideways in the summer. Sell in May, go away. So there we go. All right. Thank you, Sandy, for that reminder. Stephen did give his a 0.25. Now you said that you with the sharp rise you gave it a 0.25. I see a positive ending for Jen. Be careful not to let the forward look score this. I agree, this was nice, but this was just coming back from here. It fell and it came back. That's a nice V. Could even go a little higher. It could go a little higher. My thought is that next piece. Oh, then we have this guy. We like this. Yeah, I believe that is correct. Tomorrow, a lot of things happening tomorrow. New president sworn in, college football. We're having our meeting. I mean, it's just full of activities. My goodness. Okay. Volume. I don't know if I got to speed up. I got to yapping again. I got to get a better habit. Volume. Did we get? Nope. Average was 60, 58. I mean, it was pretty okay. Average was 59. We got 57. You can see here's a small not scored victory. This had average, like right at average. Then the next day when it's paused, it was below average. And the next day when it moved, it was up again to average. So this little sequence, that's a nice small victory for the buyers. Am I going to score it or let it influence the score? Probably not. I mean, maybe. It's a funny thing because right now in this unique fashion, well, let's just kind of see. There's the start. There's the end. We'll see. So what do I have? I've got a tie, buy, sell, tie, sell. Okay, so I've got. Here's the thing, though, right? We normally throw these three out. We normally throw those three out because they're stale. But maybe what I'll do is I'll let this existence of this little small victory, let me keep that. I'll keep it. So if that's the case, then I have 4 sellers, 2 ties, 2 buys. Yeah, see, for me, if I did that, I think that would actually be a minus 0.25. Right? A minus 0.25 is how I would score that. Now, if I look at the sanity check, I have a slight upslope. So a minus 0.25 actually feels like, okay, that's still a little conservative. That's letting a little bit of caution still just persist, and I'm okay with that. But I'm okay with that. So I'm actually that's what I'm gonna score it at. Normally would not use these because I'd say that's kind of stale. But because of this over here, I'm gonna say that's like a keep it in. That's what I get. Now, what's that gonna do? What's interesting is 1, 2, 3, 4, 5 days. All of these drop off. So next week, these 3 are going to be the stale ones. And then at that point, if there's nothing that helps me want to be like, why would I keep that? They probably will drop off. Now, we'll still have 2 sell days. So if no new buy days come, then it would still be a minus 0.25 with that. If we got one buy day, then it would be 2 sells, 1 buy, and that would probably take me to a 0. So yeah, and if this continues pushing, so I think this makes sense. I think it makes sense with what the price is doing. So I'm gonna go ahead. I'm gonna move mine. I wasn't sure about volume, but I think volume, it's enough to take it to a minus 0.25. Still negative overall. That's the hard thing about volume assessment is there's always an expect. It's not like we expect that when sellers and buyers are there, they should be tied. That's why tie goes to the buyers. It's like we expect an imbalance. We expect there to be bigger sell. Like people are more emotional around selling than buying. That's the point. So you're trying to orient that analysis to accommodate the inherent imbalance that exists. Like you kind of have to like adjust the tear and weight it a little bit so that you're like, okay, now we can see. So anyways, give me your thoughts. I'm at a negative 0.25. That does inch me up slightly positive, but we'll see what happens with major market, sector rotation, and the VIX. I'm a little behind. I got to speed up. Let's go sector, major market. Okay. What do we got going on here? NASDAQ at the top. S&P in that second place. And there's our race for third. Look at how they just sort of, they had like a, back here, they were moving in lockstep in this July-August area. And then at the election, the small caps took off and accelerated ahead. And now it's come back down, and now they're back lockstep. So there's our battle for third. Reignited all the way back to the 200-day. But we still have the NASDAQ clearly on top. Everything else is in that same position, which is what has positioned us in this 0.5. So as that little battle for third reignited and the small caps fell out of favor back into that third position, that's where we dropped. This is it. We can't score it higher than I can't. If the whole concept of major market is appetite for risk. When that bullishness kicks up, you see what happens. People start thinking small caps, right? And they're like, okay, if we see that again and small caps start moving into a leading position, that's what gives us a better score. If we start to see the NASDAQ move into that leading position, then we're a little nervous. And then we very much watch to see if the Dow. Sorry. Step back. If the Dow moves into that leading position between the Dow, if I've been saying the NASDAQ, I'm sorry, I might have said that the whole time. The Dow and the Russell in the battle for third. If the Dow starts moving up into, then we're like, wait a second. That appetite for risk is not showing money flow into small caps, which is demonstrative of bullishness. Now it's showing defensiveness, right? Now it's safe harbor hunting. So that's what we're looking for here. So as it's moved back like this, the tone is set. Now I drop back to 133. Okay, so this is somewhat good to see that the Russell in this time frame. But remember, this is from July when they were just sort of bottomed out together, including the election until now. So in this one window, the Russell still has some measure of lead, but it's not enough, I don't think. At least from yet. Maybe at the 66, maybe there's a different perspective. Right? In this perspective, the NASDAQ is actually on a little bit of a pause. But when we go back to the 66, you can see NASDAQ now back in its leading position. And this is now post-election, post-consolidation. NASDAQ is holding up the best. There's the S&P as our watermark. Here's our battle for third. And okay, a little bit of a Russell. So would I be like, oh, the Russell pulled ahead, give it a point? Nope. No. It's got to be way more prevalent than that. It's got to achieve more than just this. Like, for the last 2 days, look what it did. Let's take a look ahead. I'm still going to stay at a 0.5. Let me know where you are. Now, a look ahead. Now, remember, I've already scored it. So if you ever are wondering, like, how does this scoring process work? Ideally, I've scored it already when I get to the 66. If there's some uncertainty, I might say, if I go to the 22 and see this, or if I see this, so it can be a tiebreaker. It can get me off the fence. In this situation, there was no need. There was no need at all. So what am I doing now here? I'm just taking a look ahead. Just taking a peek. What might be. This is not going to change anything at all. But the look ahead says what? Says that in this last little bit, the Dow really held up the best. Does that make me think, oh man, that's it? Now I'm defensive? No, because there's no hint or evidence of that anywhere else but in this one small little slice. Right, that'd be if you usually trade off of a 30 and a 50-day moving average, and you sometimes look at a 200, and then all of a sudden you look at a 7-day, you're like, oh my gosh, the 7-day moving average just turned down. You're like, oh, okay. This is not a significant thing. So that's where I am. Press says he loves it. Hey, look, if it helps give us a little bit of early, like, hey, what's blowing in? That's its job. For me, staying the same. Here's another one that could be interesting. Major or sector rotation. Throughout everything that's been going on, the sector rotation has been the anchor, interestingly. What does that mean? It means that we've seen the boats all just sort of fall with the tide. It wasn't like the growth boats were falling and the defensive boats were rising, and we're thinking, oh my goodness, that's realignment. That's money flow going in a defensive direction. We didn't see that. That's the point, right? That's where we keep saying, hey, no, it's everything's going down. It's across the board. It's just a broad market. Which shows you when people talk about the concept of diversification, you cannot diversify market risk. People are like, what do you mean? That's what I mean. Right now, diversification did nothing. Everything dropped, right? Okay, let's go see. I keep saying, you got to speed up, and then I don't. I've got to get to that better cadence. What do we have still leading? Discretionary, still leading on the long term. Utilities, weirdly, they're back again. Financials, and right, we can see financials never really lost its spot. It's moving back there in the third. Communication services, not far behind. Technology, making a jump. Industrials. And then down here we have staples and healthcare and materials and energy. Okay, but that's just like the broader long term. When we zoom in, what have we got? On the 133, discretionary and financials. Discretionary and financials. Utilities below that, industrials, communication services. So that's all growth with utilities. And the story for utilities, in my opinion, really hasn't changed. The only thing missing from this is down here, technology, interestingly, as we look at the NASDAQ. And it could be that the NASDAQ has shifted and has, communication services and some other things. But technology in this time frame, just kind of lackluster. But still more growth-oriented than not. We dropped to 66 days. Discretionary, still there. Communication services, still there. Financials, top 3, all growth. Energy's made a move up. Technology's just kind of loitering behind industrials. So, and then the where's staples? They're down here. Utilities, healthcare, materials. I still feel like there's not been enough of a shift in any way that I don't think it's still growth oriented. I'm leaving mine a 1. Anybody changing theirs? Like, I just don't see enough to be like, yeah, look at this. There is this big. The only thing we see is utilities, and utilities still has that same, AI crypto-driven bank story that sort of gives it a weird anomaly and like a hall pass almost, right? Like, okay, we're going to just sort of watch it and we haven't in any way thought of it as, okay, so if you remember, all last year we saw times when it was leading. And look what the market did. So clearly it wasn't defensive. Like, we were clearly right with our assessment in that regard. I'm going to leave mine as is. I'm a 1 still. Let's go to the VIX. Actually, because I'm here, let me just real quickly pop in. Okay. Obviously, nobody in January. At last point, we were May, and then I think we actually maybe even shifted as a whole group. Let's just kind of walk through this real quickly. With that last CPI, everything shifted a little, and everyone's like, oh, wait a second. I'm still May to June. May to June is where I would be. I don't know if I'm convinced one way or the other. You can see it's still 3-1 against in March. Let's go to May. Okay, yeah, you can see it's 1.5 to 1. We go to June. June is the first time that there's slightly better than 50-50 odds in favor. There's July. I mean, the market's not convinced that even any time through the summer. It may sit all year. You look at this count, 20% of people think that even in October, there's not going to be a rate. That only drops to 17. What an interesting thought. Do we go the entire year? I think that's possible. I think it's possible that the Fed's just like, nope, we're not going to. Kick it down the road. Nope, we're not going to. Kick it down the road. Weigh in if you agree or disagree. Let's get that VIX up here real fast, and then we'll get a watch list going. And we'll talk about implications. That's a big one. What are the implications of this posture of ours? Here's the VIX. It's not tradable. I'm well aware. Okay. Oh, look at that. We're getting closer and closer to the great pearl clutch of 2024, when for no reason at all, the VIX spiked to 65. That's my name for it. Right now, that's what I named it. I hope we all adopt it. The great pearl clutch. Will somebody think of the children? Okay. Sandy liked it. That's all that matters to me. Here's where we were body. Here's where we were shadow. I'm going to map this out tight because it's important for us. The low is 1571. 1571, that's the lowest point it touched. Okay? We're going to be specific. Okay, now, here we got down to 1564. Here we got down to 1553. 1553. That's this one. Okay, so technically it is 0.18 lower. That is a lower low. For one thing, for me, is it's not going to be a higher low, right? So this was a pretty good move. So if this turns back up, that is not going to be a higher low, right? Or if it sits here for a day and then turns up, that is not a higher low. That would not dictate a hedge. Could you still hedge? Yes. Could you speculate? Why not a higher low? Because 15.53 is lower than 15.71. Lower low. Can't be a higher low because it's already gone lower than 1571. Right? That's kind of the context we're setting here, Stephen. It's impossible at this point for this to generate a higher low signal because it's already gone lower than the lowest point of the previous low. Right? Look how I have that drawn out. If it were to go up Tuesday, why not? Because Friday is the mark. And Friday is when it got down to 1553. 1553 is higher than 1571. 1571 is the mark. That's the last low, right? What low are you comparing it to, out of curiosity? Higher highs and higher lows are not established day by day. That's not a concept. That if you're doing that, be careful. That is not how trends, peaks, and troughs work day by day. If you're doing day by day, you need to go into like an hour or a 2-hour chart. So when we're like, this is a higher low, see how I have the low drawn out with the pink lines? Peaks and troughs are highs and lows. So if that's your measure, okay, but that's not going to hold water here in this analysis because that's not the analysis that's being conducted. The analysis that we're conducting is peaks to peaks, troughs to troughs. So in this situation, it already has established at 1553 a point lower than 1571. This is not now, but what I'm saying is can I, and Sandy's asking the question, is it worthy of changing the score? And that's definitely the next place we're going. Is this worthy of changing the score? But if it is something that does turn, it is still viable. If you are carrying 3, 4, 5 trays and you're like, should I consider hedging? Yes, 100%. If you got some bullish trades and you see the VIX start turning from 15, it's not a higher low, which means it's not a hedge signal, but it's still signifying something. There's still significance there, right? Those are different concepts. A signal is a very specific, it did a higher low that generates a very specific thing. But the fact that it's still bouncing off that, and even though it's 1553, you could very easily say same low, lower low. That's kind of the discussion we're having right now, because are you eyeballing it or are you going specifically by the numbers? Those things matter. The first question for Monday is what generates, and that would be easy, Stephen, is if this current pullback didn't get down to 1571. If it only pulled back, let me switch colors for a second. If it only pulled back to here and then turned, then this point is higher as a low than this point as a low. Here's a low. There's a trough. There's a peak. Now we know it's going to make a new low. So if it did this over here, that's what's higher. A higher low, an escalation. When it dropped, it didn't drop as low. The volatility stayed, but this time it didn't stay. It evaporated. It left, right? So it dropped all the way back down and then some. Right? Remember that a higher low is a signal of escalation. But what we're saying is this actually is more likely de-escalation. And if anything, I'm looking for this, the next one. That if we only get a couple of days and then we drop, well then I'm thinking we're getting the next one of these in this bullishness. Yes? Okay, so now let's go back to that question Sandy asked, because that's the right question. How do we score it? I am a 1. I'm a 1. We came from a 175. So easily we have 3 points. Where would those 3 quarter point scores? So if I did give it a quarter point here, let's just kind of what if it. Let's say I gave it that one. And then it went up and it got to 18 and whoops, that's a little too far. And then it turned over there. I would give it another quarter point there. And then from there, if it dropped below 1550, well, now you're talking about getting back down into like that prior range. And that would probably give it another quarter point there. And at that point, I would be, well under 18, getting back down towards like 13, 14, 1.75. Yeah. Actually, I feel like that, if it happened, would make sense in building back to this bullish score. So I am. It got a slightly lower low. This is to the hundreds. It's 0.18. I'm going to give it to it. I'm going to give it that 1.25. And I'm a 4.5. So what do I have? I have a stable first sign of increase. From here to here. Drop, stable, drop, tick up. Now, that doesn't mean anything, right? It means something, but it doesn't mean we're out of the woods. Let's go slap a bunch of bullish trades on. So if I'm a beginning trader, what am I thinking here? Well, Sandy made a great point. She said, I'm not finding a lot of signals. Well, because part of what gave us a part of what gave us a increased score is the fact that we did this. So we can't really be like, oh, I should have traded that when we didn't have an increased score until we got that. It may not be done yet, right? It could move another day or two into this. And then on a pullback, that's what we're really looking for, because that's what's going to cement our thought process and our score. Is if the next time the sellers come in, they were to smash it down, well, we're not going to look to trade anything, right? And that would be like, wow. And in fact, more aggressive people, now again, way more aggressive people. I don't know why you would look to trade bearishly when you just got an uptick in the market. But if for some reason you thought that might be coming right there, and the only thing that might get you this is, again, we're not getting a VIX hedge signal. But I said that you could definitely look at that and be like, I might take a speculative trade. That's this trade right here. Right? Let's see. Spec. That's this trade. If you think, oh, you know what? I'm going to put something on. So, same thing. What would I do? I could just buy some puts on the SPY. And if all of a sudden this thing accelerated down, I would have something in place. I'm not bearish, right? It would be one market-related speculative trade, and that's it. I'm not looking for that, but I know a lot of people ask me, hey, we're traders. Are we going to trade to the downside? But look at our posture. Our posture never has dropped that much. There's not really been what I would consider bearish opportunity. You got one day, bam. And then it's just been going like this. If you think that there might have been opportunity here, look at trace it back. What happened? By the time you're convinced it's going down, and then by the time you're convinced it's come back up, that's the meat. There's nothing there. When the market has bearish meat, it's going to look different than this. I can tell you that. So if you're like, and I can promise you, this is what happens. I remember from my early trading days where you're like, oh man, you hear people talk about it and you get where you're like, this thing's going to come down. It's coming down. And we just have this sky is falling, mentality that just sort of is lurking behind us all the time. That's one of the main things. That's like why Ty goes to the buyers. That's why we're very reluctant to take our short-term score negative, because that's so corrosive to trading results. It's so toxic to mindset, that whole like, oh, it's going to come down. What are we going to do? So we have very specific types of hedging signals. And anyway, right now, we shouldn't have bearish mindset. If there was anything bearish, like I said, if that VIX starts to turn and this market rolls over, then you might think, hey, I might put a bear trade on just in case. My expectation is that this is going to give me something through here in this week, probably, hopefully. And the fact that we maintained the 4 during this little, whatever we want to call this, and are now back to a 4.5, knowing that this would actually probably kick me back up to like a 6 if I get it. Yeah, I'm looking to definitely put some trades on if this comes this week, this signal. But Sandy saying, hey, I'm having a hard time finding setups right now. This is why, because we're waiting now that we got that extra little bit of price action giving us the confirmation. Now we expect the setups to follow this next wave, right? Last week the word was patience. This week the word is preparation. We were patient. Now we want to be prepared. Yeah, does that make? Are you guys with me? Does it make sense? Do you agree? Do you disagree? I was so slow today again. I'm gonna probably take about 10 minutes of your time. You're welcome to drop. I'm gonna go through the watch list now because I think we should have plenty of things. Plenty of things. Let's go. Yeah. Apple. No, not yet. Amazon. Yes, on a pullback. It's back on the list for me. 2-3 days. That's all we need. Little pullbacks will get us there. App. I don't know. That's a maybe. I'm gonna have a maybe column. AXP is a yes for sure. Loving it. Although be careful for earnings. Oof, forgot about that. BAC, fabulous. Got to a new place, new high, pulled back. BAC is a yes. BX is a yes. Caterpillar is a yes. So you can see where a lot of these yeses are coming. Financials and industrials. All these consolidations are just busting out of them, getting ready. Now we just got to wait for that next signal, start the next wave. Definitely looking to get multiple trades after that. Yeah, I like what we see here. CLS I like. I'm going to keep it on the list. It's not really ready yet. We need a pullback. CNK not there yet. Cisco still in it, looking for some continuation. Looked great at the high point of the day. Didn't quite get to the first target. Some people got some gains. Let's see what happens. I feel good with an increased market posture. Hopefully. DAL is a yes. DIA looks, no yet for DocuSign. Yes for Fastenal. Nice industrial representation. Flex. Yeah, look at that. The watch list is full of things. We just need a little bit of pullback on some of this. Bitcoin's kind of looking bullish too. GE Vernova, yes, but watch out for earnings. Gold still moving bullishly, just kind of creeping up. General Motors still no for me. Oof. Google, I'm still going to say yes. It's still just kind of flirting around. It's above the 50. Goldman's a yes, very strong on that breakout from earnings. Yes, HWM. I feel like our watch list was strong, is still strong. IBM hasn't quite done enough yet, but IP has. IWM, we'll keep watching. JCI, not enough yet. KKR, definitely. You know I love KKR. One of my favorites from 2024, along with PLTR. MasterCard, yes, but I like AXP better. Meta, Meta is it's kind of just struggling. I'm iffy on that. Morgan Stanley is a yes. It's funny because the shift in communication services is now Reddit, Roblox, etc. Microsoft got out. Microsoft got out of the consolidation. Anything in here? That's got our names. It's got our invitation ready. NDAQ, yes. It's a good list, but we still have to be patient. It's not like we can just start putting these on. No there. No there. Palantir, I like. You know I love Palantir. Always willing to trade Palantir. Roblox, love Roblox. One of the few bright spots that kept on moving. I still like Reddit. I definitely like Rocket Lab, even though it's still kind of hanging out there. But I still look at the setup until it's gone. That was another one that did well. SoFi, yes, but watch out for earnings. I can hardly keep track of. Look at the size of this list of ours. TGX, not enough. Toast, not enough. Tesla, yeah, I'll put Tesla back on. I know people, I don't really like to dabble in Tesla, but I know people like when I put it in there. TSM, yes. TTD. No, not yet. Twilio, yes. Upwork, yes. I don't even have room on my card. Twilio. And yes, I use a no card. What of it? UUP. Dollar looks all right. Let's go look at VRT. I would say yes to VRT, looking strong. Victoria's Secret's not yet. And Walmart. I still like Walmart, and I still think Walmart's actually in a setup position. So there's a couple of things, even for Monday, that might start us off. Looking for it soon. So posture has stabilized. We're looking. I feel like we did well, but we're not maybe out yet. But I would definitely, if I were you, look back at the last, look from December 15th until now. Look at the last month, 5 weeks, 4 or 5 weeks, and assess. How did you do when things got caught? How did you do in the weeks after? What's your drawdown? What's the market's drawdown? What did you learn? Let's process it too, right? Oh, wow. Look, we got through the whole watch list. That's pretty good. Now what? Real quickly, let's talk about the trading plan. I'm going to grab a copy of it. I wasn't ready. I'm not going to lie. And this week's trading plan, section 1. Section 1. Section 1. What are we working on? Personal info. Personal info. Got it. Strengths and weaknesses. Strengths and weaknesses. These two things should be a list. Just like, here's my strengths. 1, 2, 3, 4. Here's my weaknesses. Just start with that. You can start to flesh them out in detail later. These 3 things are paragraphs. Just a paragraph. Just write about, how you're going to, what's the commitment you're making and how you're going to achieve discipline. Your mission statement, like a business. What are your objectives and your values? In your vision statement, that's the colorful one. That's the one that is in 3 years when you're, trading the way you want to be. What does life look like? What does it allow you to do? That's kind of the carrot, if you will. Everyone's like, why do you trade? I'll trade to make money. Well, take it a step further. What's that money do? Don't understand why you're doing this. Make it strong, because we all know there's times where you're going to be like, why am I doing this? And that's where that vision statement comes to play. Why am I doing this? Okay. It's good to see everybody. Yes, Miguel, if you haven't seen, every Sunday I post it, and it, it starts with the video in Circle. Yes, I will post an image. It comes in the email. Yes, I will post. Do you want just this week's, or do you? I post it where it has like a 5 or 6 week, so you can kind of see where it's come from. What is the best format like for that? Like current or contextual? Give me a little feedback. Do you want just like this week's, or do you want to see like a picture of this week's with like the last 4 or 5 as well? Okay, perfect. Good to see everybody. Don't forget, no meeting tomorrow morning, but we will have tomorrow night's Q&A, and then we will have a special Tuesday session for our market open. Thank you all. Have a great rest of your day. As always, happy trading.
Recording.